PayPal just reported earnings and the stock dropped about 15% almost instantly. So here is the question most holders don't want to face. How does a company move 475 billion US dollar worth of payment in one quarter and still lose investor confidence this fast? Because this earnings wasn't about one bad number, it was about missed expectations, weak user growth, cautious outlook, and a surprise CEO change, all landing at the same time. And when those hit together, markets don't wait. They make a final judgment. In the next few minutes, we are going to break this down very simply in a plain English. We're going to break it down what PayPal actually reported. Number two, what numbers mattered and which ones scared investors the most. Number three, why the stock fell hard on results that weren't a disaster. And finally, what the CEO switch really signals in terms of the stock. And finally and lastly, where the real pressure sits heading into 2026 for PayPal. Stay with me because this is where mixed earnings and quietly turn into final judgment. My name is Naeem Aslam. I come with a wealth of 20 years of investment banking experience. During this time period, I have worked as a hedge fund trader for Bank of New Maryland and as an equity trader at Bank of America. I'm also a regular TV guest across CNBC and Bloomberg. For disclaimer purposes, this video is purely for education purpose only. We are not your financial advisor. Basically, no advice, just clarity. Let's start with the facts, not opinions. PayPal reported fourth quarter sales of 8.68 billion US dollar. The market expectations were 8.80 billion, which is not a huge miss, but for markets, that is still a miss. In terms of earnings, they came in at $1.23 per share. Again, below expectations, which stood at $1.28. That is, again, it was another miss. Now, let's look at activity because that matters the most in terms of the earnings. Total payment volume hit 475 billion US dollar. This was up. Yes, this was actually up about 9% year over year. This is the area where actually PayPal actually made a performance. But in terms of active accounts, that also improved and it went to $439 million. But if you look at it in terms of a percentage on year basis, that is only 1% increase. And here is the picture stripped down. Money is basically still moving through PayPal, but new users are barely growing. That 1% growth is not really a huge growth when it comes to a company like PayPal. And profit, if those numbers are not growing, profit growth isn't going to meet expectations, especially the future expectations for investors. And when growth starts to slow, markets don't brush it off. They worry. Which brings us to the number investors could not ignore. The most important number, as I mentioned before, it wasn't about sales. It was about active users, and of course, active users. The 1% growth of 439 million users, where the number stands at, has made investors incredibly concerned and worried. Because in payments industry, users are like oxygen, like how we breathe oxygen. In the payment industry, that is what oxygen is referred as. And if user growth slows, future payment growth also slows. And if the payment growth slows, what do you think is going to happen to profit? Profit pressure will follow naturally if the user growth comes under pressure. Now, compare that to payment volume, because payment volume grew 9%, far faster than user growth. So this is something which is certainly a lot more better, a lot more interesting number to look at, and that tells us something at the same time which is also a little bit uncomfortable. Now you will say, Naeem, why do you think that is uncomfortable? This is uncomfortable because existing users from PayPal, they are doing more, but new users are not showing up in force, and that is what matters. It is again and again, I keep repeating this one, it is about active users. If you wanted to look at PayPal stock with the perspective to buy it, you want to see that. So let me put to say this very bluntly, and then challenge you guys with question. If growth depends on the same users spending more, what happens to the momentum? They tighten their wallets. Basically, if they tighten their wallets and the new users are not coming, my question to you guys is where the growth is going to come. And this particular section is very much hanging over its stock's performance. And of course, management from PayPal knows about this, which shows up in how they spoke next. Management focused hard on progress. They pointed to Venmo. Now that was the important aspect that they talked about, that the Venmo payment growth around 10%. But now, buy now, pay later gaining also traction in relation to PayPal. Better use of existing products. A shift toward profit instead of chasing raw growth. That is what the message was from the top management. They also guided to early 2026 transaction growth of about 4 to 5%, which in reality was a decent number in terms of what they projected, because on paper that sounds like the company is very much on a steady growth path. But here is the problem. Investors weren't looking for a steady growth company or a steady growth number. They were looking for proof, a proof which will tell them that PayPal is back on track for a faster growth. That is what they wanted to hear. Instead, management from the PayPal, it warned for a number of different things. Number one, consumer spending is still under pressure. And if that is under pressure, just imagine to our earlier conversation about current consumers tightening their wallet. Number two, branded checkouts still struggling. Number three, competition is intense. And finally, improvements are slow, not fast. So none of these four agendas or the comments made by them were very assuring. So here is that brings me to the uncomfortable truth question that I want to ask you guys. If this is the holiday quarter which PayPal has experienced, holiday quarter means that Christmas quarter, what does it actually, or when will it get better? Because if holiday numbers weren't able to impress investors, how do you think the company can impress with its numbers in the remaining of the year, especially in 2026? Because that holiday quarter was supposed to be the stellar quarter. Give us your comments, because I do want to hear your thoughts in the Right after earnings, PayPal, the stock dropped a surprise. It dropped, and then there was also a surprise from the company. The CEO is changing. That is after they announced their earnings. Alex Chris is out, and Enrique Lores steps in as the CEO in March 2026. That, on one way, it is a good news, and one way it is a bad news, which we will explain in a bit. But the board openly say the pace of changing wasn't fast enough. That line matters. That was from the board what they said, because board, the director of boards, don't replace CEOs mid turnaround unless they think time is being lost. So the directors board, the shareholders board, said this guy is not doing the good job, the current job. Let's bring in the new person in who will do things much more faster, which is Lores. And Lores brings operation discipline from HP, but he does not bring deep payment experience. This is the concern that I have. So in terms of you guys, if you have a PayPal investment, the question that I have for you guys is that is this a bold reset that finally fixes PayPal, i.e. Lores, i.e. new CEO, or is this is a sign that that very much says, or this is a signboard that says that lost confidence in this particular company? Tell us, because we do want to hear that, because markets usually assume the second one more than the first one, and that is when selling peaks. After the report and the CEO announcement, PayPal shares fell roughly 15% in the aftermarket and in early tradings. That drop didn't happen because PayPal as a company was completely broken. Because now we're going to go into the details why the stock really fell. Of course, we mentioned all the fundamentals that have very much underpinned that particular sell-off. But this is what happened. So, firstly, the sales number, they very much missed expectations, right? And then earnings, they also missed expectations. Then the killer one was the user growth that was barely moving. 1% is not really a stellar number. And then on top of that, the next one comes in, which is 2026 guidance that was cautious. And finally, the change of leadership. Of course, this is a double-edged sword, which could certainly work with the new leadership. But for now, investors did not like that particular stance from the company. Or let's just say that if we put this thing simply, this earnings killed the idea of a quick fix for PayPal's stock. So answer this question and then tell us your thoughts. When a stock drops this hard on results, and then it has happened with PayPal many times before as well, and then especially when the earnings aren't that terrible, is the market panicking or finally accepting that the turnaround is slower than hoped? What do you guys think? Because that question matters, because it leads straight into 2026. Management made one thing clear. 2026 will not be an easy year for PayPal. They plan to spend more, which in a way it is good, because I like companies when they spend more, but there are also concerns at the same time as well. But they said they're going to spend more on the following. Number one, on artificial intelligence tools. Number two, new checkout progress. Number three, long-term product changes. So these 3 points that the company is doing, they are really positive in terms of investments. But again, there's a limited money, there's a limited growth, there's a limited number of new users, but they are all trying to address with them. So that means that some analysts already expect transaction profit growth to fall below 3% in 2026. So the trade-off is very much clear. And the trade-off is PayPal is choosing long-term repair, which is certainly very, very good, and they should do that, over short-term comfort. And markets hate waiting in relation to this. Market really hates waiting because market understands that there is a risk. And the risk for them is if growth doesn't show clear improvement before those investments pay off, the stock, the PayPal stock, can stay well under pressure far longer than old bullets. And this brings us to the real threat. Now let's summarize and bring everything together and provide last and final clarity. Basically, PayPal didn't collapse, but it did not convince, or it failed to convince investors, which was very much reflected in terms of its stock price. Payments are flowing, but users are barely growing. Earnings missed, and a CEO change reset the clock. Now, of course, this could have both impacts. Future, everyone is expecting it to be positive. In the short term, this is scaring investors. This earning wasn't a comeback by any means. It was a warning that the comeback is taking longer and costing more than hoped. So here is my final takeaway and a key question for you guys. I want real answers in the comments from you guys. And the question is, after a 15% drop in the price for the PayPal, is PayPal it is on track for a patient recovery growth, or a value trap stuck in slow motion while competitors moving faster? Because this is the real argument now. Follow us on Zaya Capital to stay informed. Thank you.